Moses, it's a pleasure to have you. Thank you so much for joining us. Before we talk about the broader market, maybe we should start by getting your thoughts on the Access Bank performance. Some will point to some base effects given how poorly the market fared last year. What are your thoughts about the strong growth in profits this year?
Well, to a large extent, but I think around this time last year, banks still tried. They were not really negatively or significantly negatively affected by COVID in terms of numbers that we saw around this time last year. We record that it still surprised the market, even with the performance. Yes, COVID will have actually had impact on their performance last year, but I think that is also that could have actually been something that would look like they have not done very well last year. But I think we expected the bank to do very well this year, and they will always find a way to give us those numbers. So with what we've seen from Access Bank, I think it's quite interesting, and the numbers are good. Of course, we also expect the synergy the benefit of the synergy in terms of their mergers and acquisitions that the bank has been doing to start to reflect in their numbers. We recall around 2018, the bank acquired Diamond Bank. So you expect that synergy to start reflecting in their numbers going forward. So that could also be a factor, because if you look at their costs, they've been able to manage their costs as much as they're growing their revenue.
The market's performance to these numbers are muted. They are paying 30 kobo as interim dividend. But what's your rating of the stock? Would you be a buyer of Access Bank given the performance so far?
I think, yes, for me, it's a good stock that you can consider, especially if you look at what they are even planning to do beyond what they have done so far, and look at the outlook for the banks in terms of their expansion to other African countries. And in the long run, we expect this to have positive impact on the numbers as they are able to manage their books in terms of cost and grow their revenue going forward. So I think, for me, I still have a positive view for Access Bank. But again, to a large extent, market has also factored that one into the numbers that we see today in terms of the prices on the exchange.
The market started slowly yesterday, the new month. As we count down to the end of the year, I want to get your thoughts on the outlook for the market. Where do you see a catalyst, if any, that could get this market moving again?
Well, for this year, I think we should expect a silent market or a quiet one. We won't see what we saw in 2020 and 2021. I think we shouldn't expect that, but I think we should see a very quiet market. Looking at the macroeconomic condition, FX issue is still there. Even local investors are not so keen to invest for now. Everybody is still afraid of investing in the market. And as much as we have seen significant growth in terms of GDP, 5.01%, but we all know that was basically due to base effect, low base effect of 2020 because of the COVID-19 pandemic. So it's not a strong, in fact, in most analysts, we have not even recovered from COVID. If you look at growth of 5.01% that we saw in the last quarter, and comparing it to over 6% decline that we saw around the same time last year. So you still discover that we are still far from recovering. But generally, investors will still look at some opportunities in the market, and some of these banking names are still those names that people will still look out for. But overall, we have maybe a slightly negative market. Even so far this year, market is still down around 2%. It's not a strong one anyway, but I think so far there's little or no catalyst to drive the market now. Even FX situation is still not so clear as of now.
Right. You spoke about the FX situation, and as you know, Nigeria is about to tap the Eurobond markets again to raise a few $1 billion. Some have pointed to that as potentially something that could, if you can use the phrase, provides a bit of a fiscal buffer for the country, given, as you know, the impact of the pandemic on revenues of the government. Your perspective on how that could translate into economic activity and further support for the economy moving forward?
Yes, I think many people will agree that is going to be like a short-term solution to our problem. However, the long-term issues are always there in terms of borrowing. When we borrow, how do we pay back? What are the infrastructures, and what will government do to generate sufficient revenue to pay this money back? If you look at debt service revenue, it's still quite high. And if you look at even the size of our borrowing and compared to the budget itself, it's still something that is alarming in terms of sustainability. So all these things are still there, but of course, we know that we don't have revenue. When you don't have revenue and you want to implement budget, you just have to borrow. But the major question is, what are we using this borrowing for? Are we using it to pay salaries, or are we using it to implement a capital project that can give us a positive multiplier in the future?
Well, this is a market show. So coming back to the markets, just beyond Access Bank, of course, what else do you like in the market right now? What are your top stock picks?
So for me, I still have interest in Dangote Cement as much as we've seen improvement in the numbers in terms of what we have seen in the first half of the year. But I think I'm still positive about Dangote Cement. And the likes of Zenith and GTP are still those names that you still want to invest in and have comfort that you are investing in the right stock. So I think with those in mind, then your value stocks like Nestle are still there that you cannot run away from. I think for now, I'll still limit myself to those names for now.
I know you mentioned that you're not expecting the market to do very well for the rest of the year, but quite often we hear about the sentiment about investors positioning ahead of dividend payments at the end of the fiscal year, so ahead of the announcement of results early next year. Do you get a sense that that rush for dividends could be potentially something that could spark some interest in some stocks? Or would you say that if you take a look at how the fixed income market is placed right now, that dividend yields may not necessarily attract investors?
Yeah, like you've rightly said, I'm not sure dividend would actually attract investors, especially when you look at the fact that government wants to borrow in the labor market, and the fact that inflation rates are still slowing down, and the outlook is that inflation will continue to slow down because of base effect and also harvest. So if you put that into perspective, rates are not likely to go up in the fixed income space. However, that doesn't mean that every investor will just run to this market. But it's like you rightly said, to spike some interest in terms of dividend payment, but I'm not sure it will be sufficient to drive a significant improvement in the market.
All right, let's come back to the macro story. As you know, President Buhari recently reshuffled his cabinet a little bit, took a few ministers off, the agriculture minister and the power minister. That, of course, raises the conversation again about policy reforms, the agenda of this government. What's your assessment of how things are playing out so far and the urgency to really catalyze the market, even though we did see that GDP number up 5% for the second quarter?
I think, yes, talking from that, we know we still have a lot of things to do. If you look at that GDP number, I think it's something that we worry about is the major drivers of growth in recent quarters. They are not really doing very well. Look at agri slow 1.30, well below what it used to be. And even telecommunication that used to drive the growth in the past has slowed down a little bit because of high base effect. So if you put that into perspective, you expect that the growth in GDP will slow down going forward because the base effect will not have impact again by the time you look at the next quarter and the fourth quarter and the fourth quarter of the year. So with that in mind, I think it's expected that the government will have to do a lot in order to drive a sustainable growth. We should not be carried away with the 5% growth that we saw in the last quarter.